From Wish TV and the All Indiana Podcast Network, this is the Business, Equity, and Opportunities Podcast with Scott Sander.
Welcome to the Business, Equity, and Opportunities Podcast. I'm Scott Sander. On this episode,
this is the segment each week when we turn our attention to accounting, bookkeeping, and all the financial aspects of your business. This week, Jamar Cobb-Dennard returns to explain the importance of exit strategy.
Every business is unique and has a target audience. If you own or manage a business, Circulus Digital Media can help you connect and grow your customer base with turnkey digital solutions that are nimble, offering best-in-class results, service, and support to reach a bigger customer base, allowing you to pinpoint a specific audience down to the smallest details. Get outside the city, the state, span the globe. Put Circulus Digital Media to work for you. Get started now at circulusdigital.com. That's circulusdigital.com.
I'm Jamar Cobb-Dennard, and I'm an attorney and business broker, and we're here today at the Indiana CPA Society.
And what are we going to be talking about today?
Today we're going to talk about how to exit a business. Many people don't start with the end in mind, and that's an old Stephen Covey adage, to begin with the end in mind. So there's a desire to start a business, the desire to make money, the desire to impact the community, the desire to have a product or service out there in the community. But how does somebody effectively get out of that business and also get value out of the time that they were actually building and working on that business and making an impact? Well, there's a few quick tips that we can discuss that actually help somebody begin with the end in mind in terms of exiting that business and doing so in a way that brings them value and also cash when they actually exit that business. So a few things to consider is how much money somebody would actually want to have in the bank or from the transaction when they're selling that company. That could be for retirement, regardless of what age they are, but let's say it's 55 or 65 and they want to retire and have that nest egg for the next 5, 10, 15, 20 years. Or it can be somebody who, let's say they're in their 40s, they've been in their business for 20 years and they just want to do something else, spend time with their family, start a new project, etc. So with that, business owners and professionals need to think about how much cash they need in the bank and from that transaction of the business when they actually leave at that point. And that's the starting point. We'll talk about valuation in just a moment, but you have to have the value at the end to be able to cash out and do well for your exit plan. Next is, do you have the right people in place? Are there general managers or senior managers that can take over the business, whether somebody buys it and you're selling it, or whether you're doing some sort of employee stock ownership program and selling the business to internal employees? So we've got the money to retire or exit, the people that you need, also systems in place, and finally is customer relationships. With customer relationships, if one person owns all those customer relationships, once that owner leaves the business and say it is the actual owner of that business, all of those customers could go away, and that's much of the value in the business. So transferring some of those customer relationships is also very vital and important. Next is determining the value of a business. Now, many people think the sales for my business are $1 million, so my business must be worth $1 million. Now, that's true in a couple of scenarios, and it's true in CPA firms especially, but most businesses are valued on the amount of profit they produce per year. And then you multiply that amount of profit, generally with small businesses, by 1 to 4 times. So for example, somebody has $1 million business, they profit $100,000 in that year. So their business, let's say it's 4 times whatever the profit was, could be worth $400,000. So instead of thinking I do $1 million in sales, the business is worth $1 million, it's actually worth less, but it's still a multiple of what the actual profit of the business is. Finally is preparation. We talked about financial preparation, but also there are physical, qualitative, and quantitative preparations, people, systems, profit, financial reporting, tax reporting, etc. All those things need to be in line for somebody to successfully exit a business.
Is there a difference in having the succession plan versus actually selling your business? How do those two things kind of play together?
Sure. So the difference between a succession plan and actually exiting the business is that they work together, but the timing is different. So someone who has an effective succession plan may start 1, 2, or 3 years before they're planning to exit. And that's actually one of the most important pieces of successfully exiting is planning 1, 2, or 3 years prior to the actual exit, so that when it comes time to exit, the systems, people, finances, etc., are all in place so that the person selling gets maximum value for that business.
Our thanks again to all the contributors who joined us for this episode of the Business Equity and Opportunities podcast. We hope you found it enlightening, useful, and inspiring. You'll find more information about the show on our website, BEOshow.com. You can watch Business Equity and Opportunities Sunday mornings at 10 on Wish TV or live stream it through wishtv.com. Each week we provide 7 full segments with topics ranging from how to get started and how to access capital to the day-to-day running of your business and questions about accounting and bookkeeping. We feature business news and trends and always share a success story from one of our contributors. Join us next time for more insights into the world of small business. Be sure to sign up for our Business Equity and Opportunities newsletter to get even more valuable, up-to-date information. And if you have any questions or you'd like to be part of our show, please email us. The address is beo@wishtv.com. We'd love to hear from you. I'm Scott Sander. Thanks for listening.
Watch the Business Equity and Opportunity Show on Wish TV and access all of our content and share it on demand anytime at BEOshow.com. You can find more podcasts from Wish TV on the All Indiana Podcast Network at allindianapodcastnetwork.com.